Today, we're diving into three of Donald Trump's latest tax proposals that could have a big impact on your business finances, especially if you're considering major equipment or real estate investment or thinking about restructuring your business. Whether you're a fan or not, these proposals could reshape your tax planning strategy. Let's break them down. Hi everyone, I'm Telma Landhorian, CPA and business tax strategist and CEO of Elite Consulting. We help business owners across the country save big by optimizing their tax strategies. If you're new to the channel, welcome. I break down complex tax strategies so you can keep more of what you earn. So if that sounds helpful, make sure to subscribe. All right, let's jump into these proposals. First proposal is restoring 100% bonus depreciation. First up, we have potential game changer for business owners and real estate investors, restoring 100% bonus depreciation. Under the Tax Cut and Job Act of 2017, businesses and investors could immediately deduct the full cost of qualifying asset, like machinery, equipment, and certain real estate improvements, in the year that the purchase was made and put in service. But this benefit has been phasing out, dropping to 80% in 2023, and it's set to expire for the next few years. Trump's proposal aims to bring back the full 100% bonus depreciation. If this passes, you could deduct a large portion of certain property investments upfront, reducing your taxable income significantly in the year you make the investment. This is particularly beneficial for high-revenue small businesses and real estate investors. For example, let's look into cost segregation. Let's say you buy a rental property and conduct a cost segregation study, which breaks out the property components into categories that depreciate faster, such as 5 years and 15-year assets, like appliances, carpeting, and landscaping. With 100% bonus depreciation reinstated, you're able to deduct the full cost of those 5 and 15-year assets in the first year rather than spreading them out over time. This can create a substantial tax benefit upfront, improving cash flow and making real estate investment even more attractive. This proposal is designed to encourage businesses to invest in their operation, and it's especially advantageous for real estate investors looking to maximize their tax savings on property improvements. The second proposal is actually lowering the corporate tax rate to 15%. Trump's proposal to reduce the current tax rate to 15% could be a game changer for small business owners and high-revenue entrepreneurs. The current federal corporate tax rate is at 21% right now. While this already competitive globally, lowering it further down to 15% would make the U.S. one of the most business-friendly countries in terms of corporate tax rate. This lower rate could offer significant tax savings for C corporations, but it also raises the question of whether restructuring your business to C Corp could make financial sense for some small business owners. For example, imagine your business generates $1 million in taxable income. At the current rate of 21%, that would mean 210% in federal taxes. But if the rate drops to 15%, your tax liability would decrease to $150, a savings of $60,000. For business owners who are currently taxed as pass-through entities like LLCs or S Corps, this lower rate might make switching to C Corp a more appealing, especially if you're looking to reinvest earnings back into your business. For many business owners, evaluating whether a C Corp structure could maximize their tax savings would be crucial in this new landscape. Proposal number 3 is expanding the qualified business income deduction, the QBI. Trump has also proposed expanding the qualified business income deduction, a move that could offer major tax relief for business owners of pass-through entities like LLCs, partnerships, S Corps. Currently, QBI deduction allows eligible business owners to deduct up to 20% of their qualified business income, but there are various income limitations and phase-outs, especially for higher earners in specific industries. If this proposal goes through, it could mean an increased or even unlimited QBI deduction, making it a highly valuable benefit for small businesses and high-income professionals. Suppose you're an LLC owner with 400,000 qualified business income. Right now, the maximum deduction you could take would be 80,000. But with current limits, some higher earner professionals don't qualify for the full amount. If Trump's proposal removes these limits or allows for a higher percentage deduction, you could see significant additional tax savings, putting more money back into your business. The expansion would benefit high revenue pass through entities and could make a pass through structure even more tax efficient for many business owners. For those considering restructuring, it's worth keeping a close eye on this change to see how it could impact your bottom line. If you found this breakdown helpful, please like, comment, and subscribe so you don't miss our next video. And if you're looking to maximize your tax savings before year end, schedule a call with my team at Elite Consulting. We specialize in helping business owners across the country structure their taxes to save as much as possible. I'm Telma Landhorian, and thanks for watching, and I'll see you in the next video.